Why do you think that ninjas from ancient Japan or modern stealth fighters are feared by their opponents? Well, because you cannot see them up until it's too damn late. And you know what? We are being subjected to something even more sinister and scary than ninjas. It's a hidden tax that's actually sucking the life out of everybody every single day, a death by 1,000 cuts. So, do you want to outsmart the system? Then you better listen up. Stay with me for the next few minutes to learn about monetary debasement. See, inflation is something that the average person, we kind of understand it. We go to the store, price of whatever you're buying is more. Your $100 can buy less today than it did 10 years ago. And it will certainly buy even less 10 years from now. You know this. But you know that this is by design. It's not an accident. This is exactly what they want. Now, who in the hell in their right mind would let this happen? Well, you'd be surprised the governments actually want it this way, and that monetary debasement is a tool for them, and it helps keep the government afloat. Now, what exactly is monetary debasement? Well, if I could use only one word to describe it, then I would pick illusion. Illusion. Yeah, illusion, as in like a David Copperfield kind of illusion, making you believe that magic truly exists. Government magic. The government can debase or lower the value of money whenever it wants. All they have to do is click a few buttons. It's usually associated with coins, like Roman Empire stuff, diluting the silver coins. But debasement happens when the precious metal content in that situation is reduced, but the nominal or face value is still the same. It's still worth one whatever at the day. And nowadays, currencies, they don't contain gold or silver. They haven't for quite a while, in case you didn't know that. However, paper money is easier to debase. They don't even need to have the illusion of making you think your money is worth something. It's all just worth nothing. It's paper. Now, as you might have guessed, the money supply can be increased by just, again, the push of a button. Increasing the money supply creates an illusion of wealth and an illusion of abundance, while in fact, the prices of goods are also increasing. And guess who gets to front run you on all that price increase? The banks and their buddies. Anyway, money printing can stimulate the economy. It can help the government to manage its debts, but excessive money printing can be detrimental to consumers and, of course, may end empires. Look back in history, read the Ray Dalio stuff. Go watch our Ray Dalio video. It can be devastating, okay? To understand it farther, let's take a look at history. Now, to be clear, monetary debasement is not a new thing. It's not a new idea. It's not a new phenomenon. No, it's been happening since ancient times, man. The US dollar, of course, right now, it's the most important currency today, but it won't last. Understand history. During the peak of the Roman Empire, it was the denarius. At first, the denarius had high purity. It contained 4.5 grams of silver. Nice. Of course, the amount of coins that could be minted was limited to how much silver the empire could actually go out and get its hands on. The limited supply affected how much the government could actually spend. Okay? You can see the problem here. And as you can imagine, maintaining a big standing army, as the Romans did, building all those roads, building all that cool stuff, the amphitheaters and all that stuff, entertaining the masses with gladiator matches, that can all pretty quickly drain the state treasury. So what did they do? Mine more silver? Oh no, they just decreased the purity of each coin. Same face value, less silver. It got so bad that after a few emperors down the line from the time they started doing this, purity went down to just 5%. Now, of course, that didn't help ordinary citizens. Prices of goods and services went up. The coin's value went down. In fact, went down so much that Emperor Marcus Aurelius Antoninus, aka Caracalla, increased soldiers' wages by 50%. Of course, he didn't want to anger the army, right? Now, the debasement of the denarius is arguably a major reason why the Roman Empire actually started to decline and eventually collapsed. Monetary debasement, unpayable debts, all that kind of stuff. Sound familiar? There is another more modern example. After World War I, Germany had to pay their reparations to allied nations. Now, in order to meet their financial obligations, the government at the time, well, they had to devalue their currency. In the early 1920s, the mark was valued at 8 per US dollar because of the money printing that they were doing to try to do that. And then it went to 184 per US dollar by 1922, and it was 7,350 per US dollar. Just a short time after that, it eventually collapsed and it reached 4.2 trillion marks per US dollar, and the country returned back to the gold standard after its fiat experiment completely went down the gutter, down the toilet, whatever. During the money printing period, Germans suffered, of course, from hyperinflation, and they had to use wheelbarrows to carry money for groceries. Venezuela's had a similar thing happen. It happens in modern times too. And yes, these extreme cases make our current predicament look like a walk in the park. I get it, but it can happen real fast. Okay? When the shit hits the fan, when that scenario comes, it can happen a lot faster than you expect. Not overnight, but faster than you expect it to happen. Anyway, right now we have the slow, kind of burdensome, invisible tax going on with money debasement, the tax you did not sign up for. And before we get a little more into depth with all this, I want to take a real quick moment to interrupt the flow and let you know about the West Damn newsletter in the cryptocurrency industry. That happens to be my newsletter. It's called Wealth Mastery. And every week, my team and I are working hard to bring you the greatest, latest opportunities on altcoins, meme coins, airdrops, DeFi, NFTs, technical analysis, and much, much more. We get it. We know you're busy. Wife, kids, dog, job. It takes a lot of time, okay? If you want to stay ahead of the curve, then you should join our 125,000 plus weekly readers for free. Link in the description or the pinned comment over on X. Now, look, we're all familiar with taxes. They suck. Inevitable, just, like death and taxes, right? Anyway, for most of us, it involves having a big chunk of our salary deducted before a single penny even reaches us. Taxation is theft. Look, for the unlucky ones, it can be more than a third of their income. For some people out there listening, it might be almost 50% or more of your income, depending on the country you live in. And it doesn't end there. The money you get after the government gets its share will once again be taxed when you want to go and buy something. It's pretty crazy when you think about it. How much of the money they take from you. Now, in the USA, for example, the sales tax can be anywhere between 5 to 7%. Generally, no escaping. I think a couple states don't have sales tax. But anyway, so what do? Thinking you can outsmart the government, right? You're going to be clever. Well, you need to put your leftover money in the bank, right? That's where it goes. No. What about stocks? Well, stocks have a pretty good performance historically. However, the government still gets the last laugh because you have to pay for capital gains taxes. And most of you listening will have to pay for capital gains taxes or any other kind of income derived from your investments. Again, you'll need to pay some kind of dividend tax or something like that. Long-term capital gains can be taxed at a lower rate in the USA or in other jurisdictions. And it's higher for short-term gains. But wait, there's still more. Oh, so many taxes. Because there's the invisible taxes as well. It's not just the dividend tax and capital gains tax and the sales tax, the income tax. Obviously, we're all familiar, of course, with inflation. We have to accept the fact that in good years, you'll be seeing at least 2% increase in the prices of goods and services. Means you need to make at least 2% on your money in order just to remain flat. So with the knowledge that inflation is here to stay, we all have to try to fight back with our investments to try to outperform inflation. Okay, you have to invest in stocks. You have to invest in Bitcoin. You have to invest in whatever stuff, right? Since 1957, the S&P 500 historically has had a 10.2% annualized return, which is almost always, few years, we got pretty crazy inflation, but almost always beat inflation. Of course, when you sell, you have to pay capital gains to the tax man, depending on maybe you have some retirement accounts or something that will delay or defer that. Anyway, but the government is not yet done dipping in your pocket. So you remember, the government is also printing money the whole time, thus debasing your hard-earned dollar. So your profit margin will actually end up being lower. Former hedge fund manager and founder of financial platform Real Vision, Raul Pal, he shared his insights on this one. Now, according to him, while we are focusing on the 3.5% inflation rate currently, the real issue is the 8% annual debasement of the currency via money printing on top of inflation. This makes 12% the break-even rate if you are invested in the S&P 500. Think about that. Think about how crazy that is. I know that's mind-blowing, that even the best years, you're probably still underperforming the S&P 500 when you account for all the money printing as well as the inflation. And I know it's somewhat confusing since we associate currency debasement with inflation, but think of it this way. Imagine you're a kid saving up 100 coins for a new toy. Inflation is when the price of that toy goes up by 3.5 coins. But here's the sneaky debasement part. There is somebody, let us call him Uncle Jerome, good name, who is secretly taking 8 coins a year from your piggy bank. The odds are against you. Now, let's just say that hypothetical Uncle Jerome, he also has a bit of a spending problem and he needs the cash, right? So you have 2 problems now. You see, the toy gets more expensive over time, but somebody has also been stealing your purchasing power. Now, they don't physically take that money away. They just devalue the money, okay? And that stealthy thief really can't be stopped unless you stop the Fed. Well, that would be interesting, wouldn't it? So you have to add around 12 coins a year so you can keep up to pace to be able to buy that one toy. Now, this is what's happening to you and me right now. We need to earn more and more each year just to keep our heads above water. 12% is high, but don't let that discourage you. There are ways to get ahead. By now, of course, we all know that money in the bank's not going to cut it. You're 0.1% interest rate, even your 5% in money market funds. You probably feel real smart. You're still underperforming massively. I don't think there's any bank that's going to give you 12% APY. Sorry, and that would still just break even. The S&P 500 has an average return of 10%. But this is for the whole damn index. Individually, there are a lot of stocks, of course, that can give way beyond that, but you then take more risk. Obviously, you might lose out big time too. For 2023, tech stocks ruled the index. NVIDIA, buoyed up by the crazy AI craze, had a 239% return. Great, but it's an aberration. Meta and Tesla registered big gains, 194% and 102% respectively. Again, fantastic, massive outperformance, but a lot of stocks underperformed. You, of course, need to do a lot of research before diving in any particular stocks. If you love shiny things, having a small portion of your portfolio in gold might help. Maybe over longer time horizon, stocks outperform gold, and gold, as they say, it's just gold, man. It's always been considered as a hedge against inflation. Just kind of sits there, doesn't it? Anyway, why do you think central banks globally, of course, are trying to hoard up all that gold? Because they want to have something tangible. But gold is hard to store and hard to transport. Great for governments and central banks, harder for the regular person. Fortunately, you have a better option. You have Bitcoin. In 2023 alone, Bitcoin rose 156%. And from a longer time perspective, it has showed a 671% average return for the last 10 years. The average annual return for Bitcoin has remained very, very high. Bear market years accepted, of course. With all the money printing going on, of course, more and more likely that people are going to flock to Bitcoin even more. It's deflationary money. It's money that cannot be controlled by any dirty Federal Reserve central bank anywhere in the world. Sovereign funds and asset managers are out there trying right now to include it in their portfolios. They're shilling it to their customers because they know its potential. They know more and more people are getting orange pilled every single day. You see, debasement is like tax and debt. There's no escaping it. However, we can at least have the tools, and we do have the tools to protect ourselves from it, because the hidden tax is not going away. It's very prevalent and it's pernicious in your life. We're lucky that we have options. So don't let this hidden tax ruin your investing future. Plan for it and protect yourself and your family. Thanks for watching.